Okay, so we've learned about healthcare application of analytics, and then Niraj has painted a great picture of what the data tech stack looks like. Our next speaker is going to help us understand what sort of decisions we can make better with data, and in particular risk decisions. So I'd like to welcome Jene Lim. She's the head of product management at Asia Pacific at Experian. Welcome, Jene.
Hi, John. Hi, how are you?
I'm very good, thanks. I'm looking forward to this because I guess uh, large and small companies are trying to utilize data better to make more evidence-based decisions, and that's really what it's about. It's about making better decisions. So I'm keen to learn more about this picture and how companies should think about the data that they have or can get access to, and what it actually means to them from the standpoint of the decisions they'll make.
Sure. Yeah. So maybe what I can do is to start with a quick introduction of myself and my company, so that will give you more context as to the stuff I'll be talking through later. So hi, everyone. I'm Jene. I'm actually heading the product management of credit services in Experian for Singapore as well as Malaysia. So in the day-to-day of our work, we supply data to financial institutions, fintech, MNCs, SMEs, so forth, to help them make better decisions. And this is actually the crux of what we do today. So the data that we distribute to them can come in the form of APIs, or it can come in the form of accessing the traditional reports through a web platform that we have. And that's how actually people can make use of such data. So I think when it comes to talking about how data and analytics can come into making better decisions, be it business or credit, I thought it may be easier for everyone to relate to if I could talk about it through the lens of a company who's trying to onboard new customers to actually maintain the relationship and so forth. And then I think that's how we can follow the life cycle of a customer to help you understand how data can come in handy at every stage of the way. So it could start at the onset when you're trying to prospect the correct customer, do the correct targeting. It could be during the point of onboarding, portfolio management, and even early collections if the customer failed to pay. So I will spend a little bit of time on every single aspect to give you some real life examples so that you'll be able to relate to how the data is actually very meaningful. So basically, let's imagine that you have actually found a new prospect or customer and you're trying to onboard them into as a customer. You're trying to understand what they do as a company, and of course you're trying to understand whether is it fine for me to do business with you. So during such time, during onboarding, what's very common is that people will actually get access to business information to help understand what line or industry the company is in, what is the industry type, who are the officers and shareholders, and what's the capital structure of the company, or even the financials of the company if it exists. So at the very basic level, you have to know your customer to know who you're dealing with, and this data will often come in very handy at the initial stage of onboarding, and that probably applies to all businesses who has to onboard a new customer. But of course, if you're a business who are dealing in credit terms, meaning you don't expect people to pay you cash on delivery, you have to extend credit terms like 30 days, 60 days, 90 days, or you are actually in the business of lending, like P2P companies, for example. Then what you actually will need from a data perspective is not just the basic data, but you may find that you need to understand more about the payment behavior and the history of the company you're dealing with, so you can make a very informed decision as to whether what kind of credit terms should you be giving, and if you're lending, what kind of risk-based pricing you may want to give, so that the kind of level of risk you undertake commensurates with what you already understand about the company. So I would say that from a onboarding perspective, data is commonly used to make such decisions in a more informed way, rather than to hear from the grapevine as to how this company is performing or just do some online research, right? I think those may not be concrete enough, and I think that's the reason why it's important to make use of data during onboarding, which is stage one, onboarding. When it comes to stage 2, it will be relating to portfolio management, and that's where you have found a lot of customers over time. You have accumulated them, maybe 100, 1,000 or 10,000 such customers on your portfolio. And there's again a need to continue using data to monitor their performance, to ensure that what you understood about them during onboarding, which could be 5 years ago, 10 years ago, has not changed and wouldn't impact the decisions you take with them. So it's actually important because not everyone stays the same after the initial step. And throughout COVID, for example, we've also seen how many good companies also start failing if they are not able to overcome the challenges that came with COVID. So I think portfolio management is something that sometimes may not be very obvious to users of data, but it's actually a very important element because these are the customers who are supposed to pay you on time so that you maintain your cash flow. And if they don't, then the company could find themselves in trouble. So I think portfolio management is one of those things that may not be very obvious to SMEs or corporates, but it's something I would highly recommend everyone to consider, given that it has quite a big bearing on whether are you going to be paid on time or not. So I think from a portfolio management perspective, you may also ask which are the areas of portfolio management that one could monitor for. So I think I can give you maybe 4, 5 examples of what we could monitor for. So number one, given that the company is made up of an important group of people and there's a certain company construct you saw at onboarding, we first and foremost, we need to monitor for changes in the corporate structure. So in case there's a change in shareholders or officers, or the big business actually change the nature of their industry, for example, these are important information that you want to know the day it happens, right? Or in the event that the company was previously live and suddenly it became a kind of more default or winding up position and the company status change, again, you want to know and be informed real time. So monitoring for business changes is something that is actually quite important because it affects the people, your counterparties. And these are the things that commonly the company may not come informing you on a real time basis, but getting the information allows you to probe and understand more when the situation arises. So business information is something worthwhile monitoring. Number 2, litigation monitoring. So when a company deals with any other businesses, from time to time, they may get impacted by a lawsuit, or maybe the status of their existing lawsuits may also change over time, whereby as the case develops. So one of the pertinent thing that one typically wants to monitor for will be whether have these companies in your portfolio attracted new suits, and for existing suits, what's the outcome, what's the settlement outcome, and is it going to be significant? Because if it's significant, maybe the company can go down, right? So I think litigation, again, is one of those commonly monitored items because it has bearing on whether the company may be able to survive the payment if they are being sued, and it may affect the commercial viability of a company as well. So litigation is the second thing that people traditionally will monitor. And then thirdly, financial performance. So many companies file financials on an annual basis. So what happens is that the company, when they file a latest year's financials, you could also monitor for availability of financials and then obtain the financials as it happens to try to evaluate year on year, how has the ratios changed, how's the financial performance, is there any reason why you need to pull back a line or to have a more detailed discussion or to get more collateral or to shorten the credit terms, for example. So monitoring for the ongoing evolution of their financial performance is something that can be monitored as well to allow you to know the kind of how well the company is doing, since the financial talks about the P&L and the balance sheet profile. So I think that's the third thing that people will monitor. Fourthly, I think where the company is also, it owing people money, what we really want to do is to monitor the payment performance. Because from a payment performance perspective, you want to know whether the person you onboard, who could be paid a good paymaster then, has he deteriorated to someone who may not pay on time? And that applies to companies as well, where a company can start off with paying very on time to within the credit terms, but they could start deteriorating to paying late as well. So when such things happen, it will be very useful for you to get a portfolio signal that the payment profile is actually deteriorating. So I think these are some of the 4 useful things that we would recommend any corporates to monitor for their entire portfolio to ensure that they are on top of the pertinent changes that's affecting their portfolio, and eventually it will affect the ability to collect or to actually make more business with their customer. So as a form of recap, we have business changes, we have litigation changes, we have financial performance and availability of such data. Lastly, it will be payment changes or payment performance. So these are the 4 aspects of things that traditionally we will look at during portfolio management, which can then allow you to take early collections action in the event that you are accumulating debt from someone and you're not sure whether the person will go under or not. It allows you to take early prevention or collections action so that you're not the last one left standing if the customer is going to be winding up very soon. So these are some of the things that we would actually that are very useful to any companies who are actually dealing with suppliers or customers, and they need to use data or analytics and payment scores in such a way that can help them make better decisions about the business terms. Yeah. So, and lastly, apart from all this tactical usage of data from onboarding to portfolio management, there's also this aspect of using data for market segmentation and targeting. So, for example, if you already penetrate a certain market, but you're looking for other industries that could be on a high growth trajectory, what you can then do is to look at market data to then figure out which are the pockets of opportunities that are attractive, that where the addressable market size is big enough, so that you can use such data in your internal business cases to ask for funding or to develop a strategy to carry on such proposals. So I would say that using data at an industry-wide level also have benefits because you're able to use it to carve out new segments that you may not be in at the moment. So data-wise can also be used in that way. Then secondly, now that I've actually covered how data can be used, I'm going to talk about what are the different types of data that exist right now. I'll start with first the traditional data because that's very a bit more commonplace. Then I'll talk a little bit about alternative data because that's actually the area that a lot of people are trying to obtain data on as well, especially for thin file companies and SMEs where traditional data may not available in a high kind of percentage. So I think these are the 2 areas of data that I'll be talking about. First and foremost, I think when we talk about company data, in most countries, there will be an official registry of data that exists where all official data about a company, including financials, are filed. So in Singapore's perspective or terms, it will be ACRA, who is actually able to, whom we can get data on any company. In markets like say Malaysia, it will be SSM, and actually there will be similar registries or company houses in all the markets. So how this data is useful is because you can, of course, like what I mentioned earlier, understand the construct and the composition of the company. You can even use such data to do unwrapping, to unwrap the corporate structure, to identify who's the ultimate beneficial owner. So those are useful use cases for KYC purposes for banks and lenders who need to demonstrate that they understand who their customer is. And then, so this data typically can be used to assess your local customers and suppliers. But since these things exist on a global basis, you can obtain the same information for international trade as well, so that you know the company you're dealing with actually exists and what is the official information from the registry. So registry data is a very common traditional source of data that people do use to understand the company and to make certain basic onboarding decisions. And then in many cases in the official financials of company who need to file financials with registry will also be in the same place as well. Although I must say that Singapore is a bit unusual, where we have a lot of data coming into ACRA, but in many markets, financial data may not be so widely available. So then it's up to you to locate financial providers who can, or data providers who can provide a database of such data. So I think the kind of coverage in different countries can be slightly different for financial data as well. The second traditional data that we often see in most markets is also litigation data, where the data is a registry or coming from the courts, the various courts in the country, where the data is compiled, and that can and that's actually very useful because this typically used as knockout criteria for initial onboarding, for example, where you may not want to admit people who already have a serious lawsuit or a serious claim pending against them. So this data typically is something that we also use quite often to understand more about the customer. Then the third area will be payment data, where the data is actually contributed by banks in a banking bureau. So you are able to understand the customer's payment profile by looking at the performance within the banking bureau, and that's what we call traditional data. Although I must say that again, unlike Singapore, which has a very large bank population, in many markets, especially in Southeast Asia, you will see that the unbanked or underbanked is on a higher basis. So such data, while it's good, it may be also limited where a majority of the population may not be banked, especially the very small SMEs, for example. And then the fourth category of traditional data will be in the form of sanctions, KYC, due diligence information, where data about political exposed parties and all these state-owned enterprises and all these special categories of people with sanctions slapped against them are compiled and consolidated. So that's again one of the key source of data that many banks or lenders may use in their KYC and onboarding purposes, onboarding and portfolio management purposes as well. So in a nutshell, these four sources represent the traditional data set that typically will be used in most onboarding or lending use cases. But increasingly, we also see alternative data coming into play, where we see the usage of non-banking data, such as data from telcos, data from super apps, data from contributors outside of banks, which could come from all industries like retail finance industry, telco, BNPL firms, and all that. They are also able to compile the data about payment delays and defaults in a central bureau, a non-banking kind, which is alternative in nature, so that one can actually get a sense of the payment profile of a company, even though the company may not be borrowing from a bank and therefore their data don't appear in the banking bureau. But on the alternative side, what we also do is to provide this conduit for non-banking contributors to also be able to share alternative data with the close group of users so that they are able to make better decisions as well. So for example, I may not be in the business of lending. I could be doing import-export trade, but I have people who owe me money. So what actually, and let's say someone owes me 100,000, they all have been owing me for 120 days, they have not paid. If I contribute this data to a bureau, what then happens is the next time when someone query on that company, they will see that they have owed someone 100,000, they have not paid for 120 days. I will be very careful if I were to deal with the company, for example. So this kind of payment data that is more B2B, more trade-based, is another kind of alternative way we can collect data and use data to get more insights on companies that may not have a banking or lending facility with a bank. So this is, and of course, there's other alternative data like web data, where we can also obtain information from the web to look alongside the traditional data we have to see which are the interesting information that we can, or insights we
I'm not sure what happened. I'm not hearing Jen at the moment. Yeah, I'm sorry, we lost your audio. I don't know what happened. Just as I came on the stage, while you're looking at that. Yeah, I can hear you now. So I don't know what happened. It just flicked off for a moment.
Okay.
I had a couple of thoughts actually, because
Sure.
what I realized is you started by talking about the importance of external data when you're
Yeah.
onboarding a customer, and I think that's sort of obvious to a lot of people, because before they become a customer, you don't have any information on it, internal
right.
information on it. So any information you're going to get is going to be from external sources. But I think the important point that you made was that even after onboarding, you still want to keep track of external information about this customer, because although you have internal information, their track record with you as a company, you don't necessarily see warning signs that would appear if you continue to monitor external data like their payment performance with other firms. Because if they start short paying other firms, then you may be next. And so identifying warning signs and red flags can be very hard to do just from the internal data you have. Okay, they didn't pay us for 120 days, but how do we know that they're doing that to only us and not other organizations as well? Are there things that we should, before they get to 120 days, should we have identified something from outside that would prompt us to just check and maybe get a little bit concerned about our credit terms? The other thing that I realize is, API Days, we think about APIs and partnering with other organizations. So it's not just customers that we're entering into financial relationships with. It's also partners who are helping us to serve customers. And when we onboard a partner, we have the same concerns
Exactly.
and lack of internal data to support that decision. So we need to look externally, but we should also be looking at the external sources to monitor the performance. And I think that makes sense to a lot of technical people who we build platforms and then we know we need to keep them up 24/7, and we want to see signals and monitoring of what's going on there. We should be doing the same thing with all the people that we do business with as customers or partners.
Yeah, that's right. Yeah, because I think making a sale is very hard. Collecting money is even harder. So I think we need to use all the tools and data we have on hand to make sure that our own business is also very viable. Yeah, after we do all the heavy lifting right on the technical side. Yeah, so that's why I think this kind of data needs and all that don't just extend to people who are dealing with end customers, but anyone who has business dealing, who needs to collect money, actually do have to bear in mind all these considerations as well. And I guess as we build data platforms and all that, then there's also this consideration of how we can accumulate the internal data we have, mesh it nicely with the external data to give the correct signal and make it in a user-friendly way so that the correct departments, be it credit departments and product departments, can make better decisions. So from that perspective, it has to be a holistic design where we don't just do integrations or set up platforms, but I think we have to cater for the data aspect of it to make data useful, easily accessible, and hopefully real time if possible, so that the decisions can be made in a very timely fashion. Yeah.
Yeah. All right. Well, thanks very much for sharing those insights. Thanks very much.